Now let's talk to Chukwuma Anyanwu, Head of Research at GTI Securities, as we take a look, still in the spirit of the new year, outlook for retail investors in 2017. Good morning to you, Chukwuma.
Good morning, Harriet.
So it's the first day of another brand new week, and as I said, still in the spirit of the new year. What's your outlook for retail investors? Let's talk about short to medium expectations.
Well, just like we saw with the twilight of 2016, what we would see with retail investors will largely be a situation where they will bargain hunt in anticipation for when the more structured institutional investors will come back into the market. So a lot of them play the market based on or in preparation for where they think there will be opportunities for the more structured institutional investors who do more research to be able to, position themselves for when those ones come in to push the prices up so that they can trade. So the truth is, for a lot of the retail investors, until we see more clearer policy direction from both fiscal and monetary policy administrators, in which case that would then determine when the institutional investors will come back into the market. Then that time you begin to see, until that time, what we would expect to happen would be short-term bargain hunting in the short term. As soon as prices go up a bit, they ride the bull and exit.
So earnings season will soon start, and talking about full year for 2016, and the banks are the first usually to turn in their results. Looking at 2016 and some of the issues actually you mentioned, what are the unresolved ones for banks in 2016?
Well, I think the prominent one will be a lot of them's exposure to the power sector. A lot of analysts have extensively talked about the risk that poses to the risk assets exposure of the banks. Also, the fact that we've not also seen an aggressive drive in mobilizing deposits as a result of the aftermath of the TSA introduction has seen, particularly the Tier 2 banks, a lot of them struggle with deposit mobilization, and even those that were able to mobilize those deposits did so at some premium, in which case we saw a spike in interest expenses angle of position. So yeah, a lot of the unresolved issues will be largely the power sector loans and the fact that with the recession there came about a weaker counterparty for the bank. So credit creation, a lot of them ordinarily that were supposed to be paid. So risk asset larger unresolved issue for the banks.
Well, Chukwuma, we seem to be having issues with network there, but let's see if we can quickly wrap up this conversation, even though I wanted us to talk a little bit more about some of the Tier 1 banks like Guarantee Trust Bank, Access Bank, FBN Holdings and Zenith Bank, but hopefully we'll save that for another day. But just let's wrap up this conversation. What impact do you think that most of the issues that you talked about, non-performing loans and heavy power sector loans, as well as agriculture loans that impacted very heavily on their loan portfolios, what impact do you think this will have on dividend payouts? Do you think that they'll be able to pay decent dividends for full year 2016?
For a lot of the Tier 1 banks, our expectation is, of course, that it would, you would see some shaving in dividend payout ratio, and that would mean that clearly I'm stating that I think there will be some reduction in the percentage payout for the banks, because a lot of them need to shore up their share capital as a result of the fact that the impairments would have done some damage to their shareholders' funds. So they need to retain more than they are paying out. But for the Tier 2 banks, I think we'll see more impact, because they need to be a bit more aggressive with retention now. And even for some of them, they need to be a bit more aggression in capital raising. So retention capacity for the banks will largely determine or will likely be the major determinant. So clearly we will see that a lot of the banks would reduce the percentage payout of their dividend.
But Chukuma Anyawo, Head of Research at GTI Securities, thank you so much for joining us live from GTI Securities Trading Floor and sharing your perspectives with us. And that's it on today's edition of Business Morning. Thank you so much for being a part of it. I'm Harriet Agbinu. Have a profitable day.